Just give me a second. Yeah, I hope my voice is clear. Happy noon all. Thank you. Thank you for the response. So it's a pleasure to have you all for today's session, how budgeting helps in sales growth. Thank you. Thank you, Pavitra. Yeah. In fact, if you look at it, no, the topic is very simple. Budgeting helps in sales growth. Uh, how many of you think that budget is very simple and it can be done? We always see finance minister presenting the budget and it looks nice when it is presented, but we do not know what happens to the economy after that. So how many of you feel that budgeting is just for namesake and because see, one thing, you have come to this session to understand about budgeting. So I want to know if there is any apprehension in your mind and you need to know what it is, you can openly converse with me. We are just 20 people around right now. So it makes lots of difference if we are more interactive. Definitely not simple, but very important. Yes, Jaya, it's not simple, but very important. We've been very casually using the word budget. What is budget? How budget has to be done? What are the approaches to budget? There's a lot of, process or structure to the entire budgeting process. But yes, as simple as it is being shown on a day-to-day basis, not really as simple, but not very complex that we cannot follow. It's somewhere in between. We just need to have that inclination towards it. My entire endeavor in this session will be to give you that clarity why financial would say budget is also a tool that helps people look at financial literacy in one way, how financial numbers or budgeting can give clarity in your thought process, clarity in your decision making. Finally, when we as an entrepreneur, the entire session is for entrepreneurs. When we look at entrepreneurs as entrepreneurs, the faster we take a decision, the ability to execute the decision will determine the pace of our growth. But to take the decision, we need a lot of clarity. We need to know what are the pros, what are the cons, how and what kind of impact it will have. So unless we have the clarity, it is difficult to take the decision, and budgeting provides that kind of clarity. It's a simple word, but it requires discipline and it also requires a structured approach. Countries follow budgeting. Organization which are not necessarily promoter driven, which means which are not necessarily owner driven. Okay, let's say a lot of listed companies where the shareholders are separate from the management. What guides the management? What is it that they look forward when they manage the company? There is one guiding force that helps the organization to move forward. One is the vision for which the organization has been set for. The second is the budget. We have allocated this much resources for the country India. We are looking forward for this kind of growth in India. This is what we are looking at Sri Lanka. This is kind of resources that we can allocate for Sri Lanka. So internationally, if you look at it, all the international organizations have a budget and they follow that kind of discipline to report for the budget. Similarly, if we want to scale up in our journey of entrepreneurship, as an entrepreneur, if we have to surrender to one thing, that is our budget. It also relieves the entrepreneur a lot of burden. We should look into it. We will look into it in our presentation. So budget is one guiding force that helps the organization to grow. Organization world over, countries world over have been following that, and there is a purpose to it. How it needs to be done structurally and how it can lead to growth is the main agenda for this session. Now, let me take you through the presentation. Are you all able to see my screen? I just want some response so that I know you're able to look into my screen. Even a thumbs up should be of help. Yeah, Subhashni. I assume that your hand is for telling me that my screen is visible.
Yes, ma'am. Yes, ma'am.
Yeah, sure. Thank you. Okay, so we from Consulting and Beyond are welcoming you all here. The topic of today's session, annual budgeting helps in sales growth. How? Now the entire discovery, the journey is all about how. The agenda is what is budgeting, types of benefits of budgeting, types of budgeting, budgetary cycle. Yeah, somebody has raised hand. You can unmute and speak. Yeah, Praves. Anything you want to ask, you can ask in chat as well, or you can speak up. Can I continue then? So the agenda for today's session is what is budgeting? What is the benefit of budgeting? Types of budgeting. Budgetary cycle, selection of budgets, how we should select the budgets that we want to, and how budget helps in sales growth. Now, what are the common challenges faced by an organization? Somebody has raised hand, but I am not able to understand why. If they can speak up, it's good. Okay. Now let's understand one thing. What are the common challenges faced by an organization if annual budgets are not prepared? Okay. Now let's say control. This is a poll, and one of the reason could be lack of control over the cost. We don't know. Again, Pravesh has raised his hand. Is there any challenge? Kirti, can you just text him and check? Yeah?
Yes, ma'am.
Yeah. So, common challenges faced by an organization without preparing annual budgets. One, lack of control over cost. Okay. Unsystematic growth predictions. We do not have a budget. So as an entrepreneur, we look forward for different growth avenues, and maybe it's not aligned towards our goal. It can be that. Inefficient decision making. Can that be a reason? If we do not have a budget, then maybe our mind wavers and we take decisions on a random basis or not so thought or aligned basis to our goals. Is that possible? Or we could be facing operational challenges day to day. We are facing every day. We have to take a decision whether we have to incur these expenses or not. Is that possible? Or all the four, A, B, C, and D: lack of control over cost, unsystematic growth, inefficient decision making, operational challenges. Very good. Okay. Okay. So the results of the poll are here with you. Almost 75% are saying that all the four can happen. All the four challenges will be occurring in an organization that does not have annual budget. Absolutely right, because a budget is a guiding force. It is like the lighthouse. It helps you align yourself to the destination that you want to reach. Yeah. So thank you all. Thank you for attending the poll. 75% of us believe that these all can go wrong in an organization when we are not having budgets. Now, when we know that these are the challenges that happen, then I think we should be preparing budgets, right? Why do you think most of the organizations or a lot of small and medium scale enterprises, in spite of facing these challenges, do not prepare budgets? There should be something in their mind, right? I mean, I'm an entrepreneur. I know It is important for me to prepare budget so that I'm aligned, my goals are aligned, my decision making is aligned, my growth is aligned. I don't have to think whether this will be the right way to grow or that way. I know that this is the way to grow. Then what happens? Something happens, right? We are still not able to prepare budgets. Most important thing that any financial management, anything with respect to growth requires is discipline. So when we are preparing budgets, we are trying to discipline ourselves to something. We say that this is going to be my revenue, this is going to be my cost. So I will stick by this come what may. So this requires a lot of discipline. If you want to see a very healthy, growing organization, you see the way they are operating. They know their boundaries. This is the boundary within which I can operate, and budget sets that kind of boundaries. Now I've been talking budget is important. Finance minister prepares the budget. She prepares. An organization that is growth, looking forward for growth, prepares budget. But what is this budgeting all about? We have seen that there are challenges in organizations that are not preparing budgets. We need to understand how we should mitigate those challenges. We also need to understand what is budgeting. Challenges are there, we have to mitigate. Budget is the solution. What is budgeting? Budget is nothing but, it's a very simple thing, a financial quantitative statement prepared and approved for a period of time, which means it starts with numbers, something that can be measured and monitored can be grown. For example, let's say our health. We know our weight, okay? So we monitor the weight and we make sure that we are healthy and fit within the range of a weight. It is measured, so it can be monitored, and so we can look forward for growth. Similarly, in organization, we have a statement called profit and loss account. That profit and loss account gives us that measurement of an health of an organization. Revenue should be so and so, expenditures should be so and so, and this should be my profit. So it becomes a yardstick. So a financial and numerical, a quantitative statement that is prepared for a specific period of time. Say I want to be number one in my industry. Let's say that is my goal. But it can't be, it is a goal and we have to achieve that goal. How? What is the step-up approach towards it? Year 1, I will be doing this. Year 2, I will be doing this. Year 3, year 4, year 5. Maybe we have a visibility for 5 years. But when we have to execute, it is on a yearly basis. There is a concept called annual. Why is it annual? Why do we have New Year's? In every culture, every religion, we have a New Year, okay? Which means there is a concept of measurement for all the seasons, for all aspects. It is considered to be a 12-month period. So similarly, we have a financial year. In India, it is from April to March, and other countries Jan to December. So it's a very specific financial statement for a period of time. What does it contain? Yes, I know it's a financial statement. It contains a plan for the future costs and revenues for that period of time. It can, okay, cost, revenue, income, expenditure, cash inflow, cash outflow. There are various terminologies that can be used. But fundamentally, this is what a budgeting is all about. All the operational, the policies, the standards, the targets, everything regarding to the organization gets culminated into one single sheet or one single financial plan. And that is what budgeting is all about. It's a pro tip. It's a simple annual goal for an organization with respect to its income and expenses. Anybody still want to know what budget is all about? More clarity? Or are we clear what budget is all about? If you tell me yes, no, I think I will be more comfortable. Give me that comfort that you are there along with me. Maybe you can type, I got it. IGT, simple way. Yeah? Great. So most of us have understood what budget is all about. It's a financial statement that pertains to a specific period. It records income, it records expenditure. Now, what's the next thing? I know what is budgeting. I have challenges in my organization. That challenges can be mitigated through budgeting. There are benefits that you will derive once you start doing budgeting. What are the key benefits? See, my entire presentation is into three parts. The first part is more about why budgeting, what is budgeting, and what is the benefit of budgeting. The second part is the type of budgeting, where it is applied, what kind of organization to take up those kind of budgeting. Third part is the review part. Once you have budgeted, how you should review and how review and monitoring helps you scale up. I will give you practical examples that we have done for our clients where where organization have made a tremendous increase in their profitability due to a budgeting exercise. So let's begin. Benefits of budgeting, there are two types. Tangible benefits, that is purely visible, and the intangible benefits. The intangible benefits are continuous growth, which means once you prepare a budget and you set, yes, this is what you want to do, this is where you want to grow, your outlook itself becomes growth. Sales numbers, profit numbers, everything is aligned to that growth. Second, the planning and the execution of the management is also towards the objective. The objectives of the organization also gets defined. See, objective can be anything, okay? As simple as I want to expand in Tamil Nadu market. That can be an objective. To expand in Tamil Nadu market, I need resources. What is the meaning of expansion? I have a revenue share in that market. Now, my objective can be to sustain my profitability. There's too much of competition. I need to sustain my profitability. The objective could be to improve my profitability. So it all depends on what is the objective of an organization during that specific period of time. Once the objective is known, then the plan, everything follows. Continuous performance monitoring. Once budgeting is in place, the entire process of budgeting is a cycle, okay? The entire process of budgeting involves continuous performance monitoring. Month on month, when we as entrepreneurs review our numbers and see where we are moving ahead from last month to current month, we know, yes, this is the area I need to focus upon. This is a challenge I'm having. So it involves continuous performance monitoring, which enables us to take better decisions. It's almost like real-time decision making, which almost in an autocorrect mode, you can say. It helps us direct our resources, both capital as well as revenue resources. By capital, I mean plant, machinery, fixed assets. Revenue resources, your labor, your raw material. I mean, the resources that are for the long term are called capital resources, and the resources that are used for the short term for a period of time are called revenue resources. It's a beautiful measure of controlling expenditure. As entrepreneur, we get guided by so many things, or not guided, in fact we get influenced by so many things, that every time we feel this should be a better option for an organization, that could be a better option for our organization. But when we have a budget, it puts in place, I can spend only 10 lakh, 20 lakh, 10 crore, 20 crore only on my marketing and sales and distribution. Now within this 20 crore, whatever you can do is your job here. How are you going to pull that resources of 20 crores is already budgeted there. So when I have a sales growth, then I have the means and measures to improve on my expenditure. So a budget gives you that guideline, not only sales, but also expenditure, but also cash flow. It's the most convenient tool for management decision making. In fact, if somebody comes to you, you can say, see, this is not budgeted or this is not allocated in my budget for this year. Maybe next year I can consider. That is a more better way to negate somebody, because otherwise the entrepreneur is already on the gunshot. You have to take it. He's obliged through relationships. So a budget acts as a guiding force for the entrepreneur as well. It helps him in decision making. Not only him, the entire team. That's what I'm going to come to. The next part of the entire thing is intangible benefits. Yes, there are a lot of intangible benefits due to budgeting. One of them is, whether you want it or not, your focus goes towards expansion and growth. Okay, I know market is not good, market is not happening, COVID, this situation, that situation, but I have budgeted something. No, I have to work towards achieving that budget. So intangibly also you focus towards expansion and growth. It also creates an environment for achieving common objectives. Every department, every member in the organization has to be aligned towards the organization goal. Once that happens, it becomes much easier to achieve the goal. Every time an entrepreneur or even the senior manager does not have to substantiate stating that, oh, please, this is happening, that is happening, this is the reason, that is the reason. We all know that we want to achieve so much. The HR is given the responsibility of so many members. This is the cost he has to work with. Yes, he has to work with the cost. He knows his responsibility there. Marketing knows its responsibility. Production knows its responsibility. Sales knows its responsibility. So everybody know their responsibility for achieving a common objective. One more thing that happens whenever budgeting is taken up, entire data across the organization, across the businesses, across the divisions gets refined. So you will record expenses accordingly so that there is a lot of clarity which division, which product is incurring what kind of expenses and how it needs to be handled. Overall, the organization is very motivated because they know they have already achieved so much, only so much to go. And let us say, when you are budgeting, you have budgeted a very high number. Okay. Maybe that's not possible to achieve this year or some things. There is some reason. Then you redraft your budget. Yes, I understand I budgeted this thing. But for the next 6 months or the next 4 months, I recast my budget as so and so. That is possible. That also can motivate you. Yes, what is possible? Let me first complete it and then move towards the next. So once when we look at budgeting as an exercise, as individuals, we take resolutions, as organized, as as association or as communities, we have certain rules, guidelines, objectives to follow. Similarly, as organization, we have a budget, and that budget guides us towards the goal of an organization. It encourages competitiveness among employees. It also, fundamental aspect is like this. There is an organization, it wants to grow. It needs a tool to grow. How it can align everybody to one tool that can help you grow? Budget is that one tool. Why budget is one that tool? Because it is very simple, it is very quantitative, there is no subjectivity in this. I say 25 crores is my top line revenue. Yes, 25 crores will be my revenue. There's no ambiguity. I will expand in Kerala market and Karnataka market and Tamil Nadu market, and this is what is my goal. There's no, in Kerala market I want to achieve 15 crores, in Tamil Nadu market 25 crores, in Karnataka market 10 crores. There is a lot of clarity with numbers. Second thing, when every transaction in an organization, each and every transaction, this is very important, every transaction in an organization, there is a financial implication. Whether you accept it or you do not accept it, it's perfectly, even if you do take one decision. Let's take a decision. You want to take your employees for an outing. It is fun-filled activity. There is no client deliverables. There is no pressure there, or neither the employees are dissatisfied. It's a fun-filled activity. Now, does it involve cost or not? Yes, it involves cost. So every activity like this, let us say you have a offer. You want to provide discount on one, buy one, get one. When you do that, is there a cost involved or a revenue loss involved? Yes, it is involved. So every activity of an organization will have some financial implication on the other. Now, to tie the thread together with all the departments and all the functions, even when you are a small organization or you're an organization of huge magnitude, budgeting helps. I hope I am clear. And now let's say, just to summarize what we have seen so far, budgeting helps in effective target setting. It helps us to understand what is the action we need to take for this target. It could be cost wise, it could be anything. Okay, I had an organization where they had put budget just to make sure that the COVID year they are doing a break even. It's a very simple thing. We should do a break even this year independent of COVID. So absolutely fine, and they were able to do it. Okay, and another organization, they wanted to scale up 40%. Okay, yes, the industry, it was an edtech company. In fact, that company did much more online than offline. It was a complete shift in their business model and they were able to do that. So, though we didn't do, but I budgeting for them, but then this was their process and their thought process got aligned there. Then the next one was control mechanism. If something is not going as per your expectation, as per the budgeted expectations, then and there you will know you can control your costs then and there. It is not that it is a long term commitment, you have to hold on and then you incur losses. See, one thing, you retain your employees, you pay them salary, you are able to sustain it, it should be good to go. But in cases where your sustenance, where the organization sustenance itself is a challenge, then you should be able to let go of your employees. If the organization survives, everybody survives. If the organization does not survive, nobody survives. So all these parameters need to be taken into consideration while budgeting and even interimly when the review happens, even during that time. That's why we say it provides a feedback and real-time decision making. Every month when you review it, next month, is this decision right? Is it happening right? I should give it 3 months time. I should give it 6 months time and look into this decision. Yeah. So that's how budgeting needs to be set. There's a small poll here. I think, yeah. So budget is telling where your money to go. Where should your money go instead of wondering where it went? It's so aptly said. Most of the time we said, oh, after reviewing after 1 year, oh God, I spent money here. No, that was not right. Or I didn't get the benefit. What happened? I went to the conference. We set up the stall. It was such a nice thing. Everybody appreciated it. Why didn't we get conversions? What happened to our leads? So these kind of introspections will happen post 1 year, let's say, when you review your financial records. But let's say you have a budget or you have a mechanism of review every month, then you know this is what and this is where. Then where is the funnel? Where did it go wrong? Next time we won't do this. We will still go for the fair in February or in March and we will make these corrections and then take it forward. So these are a couple of things that help us in taking decisions. Yeah. So now, any doubts so far? Let's have a quick poll here. Why budgeting is necessary for an organization? I think my team has done a good job here. They are assessing whether you've got what I'm trying to tell you. Yeah. Is it to increase working capital? It helps in target setting, or it helps to understand the action required to be taken? Okay. Okay, perfect. So 60% of us have said that both B and C, which means budgeting helps in effective target setting and the required actions to be taken. And 40% are saying to increase the working capital to make, that is option F, to make effective decision target setting and to understand the actions required to be taken. The answer actually is B and C. We will see why working capital and when it has to be incorporated. Perfect. So this was our poll. We know why. What are the challenges an organization faces when it does not have a budget? Then second, why budgeting is necessary, or what is budgeting? Third, what are the benefits of budgeting? Now that you know what are the benefits of budgeting, you should also know to reach a destination. I have a goal, but I can reach that destination. Let's say I want to go to Delhi. I have multiple vehicles through which I can go. One, I can go by car, I can go by bus, I can go by train, I can go by flight or any other medium. Two, let's say all of us have to reach Delhi, and somebody is staying in Rajasthan, somebody is staying in Tamil Nadu, somebody is staying in Uttarakhand, somebody is staying in Madhya Pradesh. One is from a hilly region, one is from a desert, one is from a terrain, one is from a plain. All of us have our own challenges to handle to reach that destination. What medium, what methodology that we take is independent, but our destination is same. What is our destination as an organization? We want to grow. There is a target. We want to reach the target. Now, to reach the target, there are various tools available, various methodologies or various types of budgets. Now, can anybody, okay, couple of them, what could be the various types of budgets? Somebody says option D. Yeah, what could be, just for understanding, what could be the different types of budgets that an organization can deploy? You can write it in the chat box. Sales, marketing, perfect. Yeah. HR budget, perfect. Increment, yes. So whatever has been the last year sale, we will do an increment, perfect. Cash budget, perfect. So budgeted pertaining to expenses, yeah, employee engagement, production, finance. So for each functional department, food and marking. So for each functional aspect or activity, there can be a budgeting. Now let us see what are the different types of budgeting and how we should deploy what kind of budgeting in an organization. We have one, incremental budgeting. Second, activity based budgeting. We will see. Third is zero based budgeting. Fourth, profitability budgeting. And fifth, cash flow budgeting. There are various other types of budgeting as well, but I've just chosen this 5 because of their varied nature and the purposes they serve. The first one is incremental budgeting. This is the most simple budget form of budgeting. What I have performed last year on that, maybe because of inflation or maybe because this year my competitor is not done well, I will get the market share, so I will have a 30% growth. It's a simple incremental budgeting. So just take last year's figure, add or subtract whatever percentage and get into the next year's budgeting. It's very easy to understand. In fact, it is, to whom is it applicable? For organization with operational stability. Okay, years together we have been in this business. This is the market. This is the market we are catering to. These kind of people come and buy, regular set of customers. So either I increase the number of products, or I increase the pricing, and then I come to an incremental number. That is for the sales, but otherwise cost also, salary increase, same set of employees, the same. This is very simple operational stability for organization with operational stability, because here you do not have to work on the capital requirement. Whatever the business generates, the business uses or the entrepreneur takes it out. It's very simple form of budgeting. In fact, for age-old firms where they have saturated, let's say, the market share or their capacity to service the market share, they will do incremental budgeting. Little bit improvement over their last year performance. Yeah. So incremental budgeting, one example, there are simple examples that I have taken. Sales, the sector is poised for a growth of 10%, but this organization is planning for 15% growth. So last year sale was 100 crores. Current year sale is 15 with 15% growth is 10 crores, and 10 crores 15% is 11 crore 50 lakhs. Now similarly for salary as well. Last year I had one set of employees, and for those set of employees they were paying 4 lakh per month. Now currently this year there's same set of employees and we are planning to give an increment of 10%. Then what will be the budget? 4 lakh 40,000. Now let us say you add people here, then the salary of these people get added. But if you add people, for what are you adding people? The operations are already stable. Now there should be something new that you are doing to add people there. Oh, what is the thing that will add value to the organization? That's a question that you need to ask. That will come in the other budgeting. I'm just telling you here. Another thing is, let's say sales and distribution expenses. A lot of people during COVID realized that why we should do so much of selling and distribution expenses, or can it be reduced? Can it be channelized to different medium? All those questions had come to people's mind. So they had a sales and promotion budget, and then they said that for your 22-23, we want to reduce it because one portion, one ad, or one this thing that we were giving is not leading us to a fruitful result. We have observed it for not only this year but last 2 years as well. So basically, before stopping any expenditure, no, all entrepreneurs will think twice. Will it have an impact or not? When they understand that there is an impact, it's a completely different thing. Then they will take actions accordingly. When there is no impact, then they will reduce those expenditure. But it requires a lot of courage to do that. But people have done that. What I have seen people doing that right from last couple of years. So when they don't find it fruitful, then they cut down on those kind of expenditures. Again, okay, next, budgeting. So what we have seen is incremental budgeting, the most simplest form of budgeting anybody can do for their organization. It is for stable organizations, matured organizations where they have reached their potential and they can work upon. I'm just giving it as an example. It can be worked out for any organization depending on stage of growth the organization is in, the environment it is operating in, and what is the vision for the future. Any budgeting, when you assess that I need to do budgeting, should I go for this? What is the stage of growth? What is the vision for the future? And what should be my scalability? If you understand this, you can apply which kind of budget you want to apply in your organization. The next part of the budgeting is activity-based budgeting. Now, what is activity-based budgeting? I know some of these are very new terminologies to a couple of them, but still, let's give an attempt. What is activity-based budgeting? You can reply in the chat box, or you can unmute and speak. Activity-based budgeting is for specific purpose, okay? Or a market segment, okay? Yeah, I understand. Activity-based budgeting is for organizations where the paramount importance of a work being done is based on an activity that the labor carries out, mostly production, but then also in service industry. For example, let's say activity business, basically it leads to what, whether, for example, if you have a cloth fabric manufacturing unit, so you have yarn. From yarn, it's been warping is an activity. Then it is, what do you say, put into looms, and weaving is done. So weaving is one activity. Then processing is being done. Processing is another activity. So each activity matters on how the output, what kind of output will it result to. So what is the input activity? Suppose let's say for a simple trading concern, goods are coming in, somebody is picking up those goods, that is one activity. Then the goods are counted, stored, then they are kept it in the warehouse. From warehouse, then they are moved to the showroom. From the showroom, they are moved to the customer, which means they sold to the customer. So these are the various activities that happen in a trading organization with the goods. Now, each of these activity, what is the cost involved? What is the per hour? What is the activity? What is the cost involved? And how many units have been manufactured? How many units have been delivered? So we analyze it activity based. Type of work, quantity of work, and cost of work to be performed. Why you should get into activity based budgeting is, let's say manufacturing unit, every activity requires different timelines, and for each of the activity there is a different output that is coming for the same timeline as well. So in such cases, when you do activity based budgeting, you will know where is the bottleneck in the organization, whether that activity can be clubbed along with another activity, or that activity needs to be replaced by outsourcing. That happens when you do activity based budgeting. Yeah, clear so far? I'll give you examples as well. Yeah. So in activity-based budgeting, a company A produces product X that involves two steps, which means setting up of the machinery. Second is assembling. All the products needs to be assembled into one unit. Okay. For that, we need some raw material and there is some maintenance cost. So the number of units produced, 2,50,000 last month. Material purchased was for 12,50,000, which means 5 rupees per material. Okay. And setup cost. Each time they did a setup, it costed them 400 rupees per setup. And assembling, number of people involved in assembling all the parts and everything together, it costed them 2 crores. And how many activities happened? 40,000 activities happened. Labor hours were consumed. So 500 rupees per labor hour. And similarly, machinery maintenance cost, it ran for so many hours and hence it costed them 76 lakhs. So this was their cost, activity-based costing. Similarly, let's say next month I need to produce 3,25,000. It's a very good number. From 2,50,000, you're improving. So multiply each of these cost drivers to them. That becomes activity-based costing. This is a very simple example. What is the cost per activity and how much, if I'm going to increase my production, will it cost me the next month? Yeah. Any doubts here so far? Accounting cost based on specific activity. Yes, specific activity like launch of product. Yes, for launch of product or one-time activities, you can, let's say even in family, okay, there's a birthday party or there is some function, then we do some kind of budgeting and planning. No? So one-time activities or one-time events also will be done through activity-based planning, can be done through activity-based budgeting. Yes. I know Manoj sir is coming from the marketing point of view. So he's talking about launch and other things. Yeah. What is activity? Another example is there are two products that a company manufactures. One is high volume product, which means the numbers are higher. And the second one is low volume. There are 4 activities that again purchasing. So number of units that they purchase. Second is setup of machinery. Then running of this, actually it's written as 4th, but running of this machinery, which means operational costs on this machinery. The 4th one is the inspection. Once the output is received, what is the inspection cost? See, here we have taken this as examples. Okay, there could be other 10, 20,000 things that are happening in an organization. So these are per unit. If you know these many activities has taken place and this is per unit, then you know cost per driver. Per unit of raw material purchase, it costs you 2 rupees. Then 200 rupees for, 200 rupees per setup for machinery, 2,000 rupees per setup for a machinery setup. Then 100 rupees per inspection hour. So every hour a person is inspecting or number of people are inspecting or the machinery is involved in inspecting, it costs them 100 rupees. And it took 4,000 inspection hours for them, which means it costed them 4 lakh rupees for inspecting 1 lakh units. Yeah. And similarly, 30 per machine hour is their labor time, machine hour time. Yeah. Next month, they are forecasting something. I want to produce 7,000 units of product A and 4,000 units of product B. The setup time is going to be like this. The inspection time is going to be this way. And the machine needs to run for 1,500 hours and 500 hours respectively. So considering that, you do a simple multiplication, you understand this should be your total cost for the next month. 2 lakh rupees should be your total cost. Now there is one more method, one more thing that we can look into. For example, let us say in this, the inspection where your total available hours is 4,000 per month, but this month, 4,000 hours per year. This year you are expecting to produce 1,32,000 units. Okay, so the number of units inspected per hour increases from 25 to 33. which means there was a capacity that was not fully utilized last year, which you are planning to utilize it this year. So whenever there is a capacity utilization challenge, there are inspectors, for example, they are paid on a salary basis. But last year you could manufacture only 1 lakh units and you paid them full salary. This year you are manufacturing 1,32,000 units and you're still paying them the same salary. Now your cost per unit decreases from 4 to 3. Now, when you do this activity based costing, you will understand that per unit, per activity, this has been my cost. Unlike the traditional system where you will say, yes, my cost was 4 lakh last year and now it is going to increase by 15%. All the raw material, everything, salary, everything is going to increase by 15%. So it is going to become 5 lakh 75. Sorry, 5 lakh and 5 lakh 75. So this is one method of doing. That's why I'm saying incremental is a very basic, a very simple method, but we can start from there and then move to activity based budgeting also. Somewhere we need a starting point, right? Okay, now with activity based budgeting, what happens? The focus is on what is the activity and whether the activity is being effectively done. Are all costs incurred towards the activity fully utilized or not? This is majorly done in a lot of manufacturing organizations. And apart from the manufacturing, service organizations have also started following what kind of. Recently, we did a costing where we knew that the labor hours were so much because of the COVID, they didn't have sufficient orders. So per unit of output had too much of labor cost. But the next 6 months, we know that when the orders are going to be full, the labor cost is going to decrease substantially. So lots of things like this can be achieved. Lots of cost efficiencies can be achieved through activity-based costing. Now, the next type of budgeting is zero-based budgeting. See, don't tell me, Ratan, I knew only one budget which finance minister was prepared. Now we are coming up with so many types of budgeting. How life is getting complicated now. Okay, I will simplify this also. Let's not complain. Let's first understand there are different things for different people. We are all different human beings. Organizations are different. Okay. Let's say if I do an incremental budgeting for a manufacturing company which is not fully utilized to its capacity, will I be doing justice to the task? I may not be doing justice to the task. So now we need to apply things according to the needs or the growth stage, the scalability and the vision of the organization. Even within an organization, we can have two separate budgeting. I will let you know about it also. I'll let you know about it. Let's see. Okay. What is zero-based budgeting? I don't want to confuse. I want to give more clarity. So I will surely make sure that we are ending with a lot of clarity. Anybody here? What is zero-based budgeting? You can write it in the chat box. From the beginning. Perfect. Yes. There is no record. Perfect. Though there can be record, but I will question every expenses that from the scratch. I will question perfect Jay, from the scratch. What we will do is zero-based budgeting is a method of budgeting in which all expenses must be justified for each period. Let's say there is an insurance expense. Okay. Last year was COVID. So I made sure that I am insured enough so that nothing was a challenge for my family. Now I will question why you need this insurance today. Oh, this year also COVID is there. So I need that insurance. Absolutely. So you're justifying the expenses. Okay. Similarly, every expenditure in the organization. What happened during COVID, the first 1.5 months, that is from April to May, let's say even May end, it in fact put entrepreneurs on a cornerstone, which means they were bound to think, why am I expending? Is this required? How can I mitigate it? Is there an alternative channel? Can something else be done? Let's say the same thing, okay? Lot of traveling expenses, okay? That has put into question mark. Why you need to travel? You can take the meeting in Zoom itself. Is it not so? It has become convenient. We wouldn't have thought about it 2 years earlier. So when we question the status quo, why are we doing what we are doing? Why this expense need to be incurred? Is there an alternative? That is how zero-based budgeting is set. It does not say you should not make expenses. Zero is the base. It starts from the scratch. Okay. You, even if it is an organization that is running for years together, the COVID made everybody relook. So they were working on employee cost. Can I pay them 50% salary? Can I pay them 25% salary? I don't have income or rental. I need to renegotiate the rentals. What can I do? There are no incomes today, tomorrow. Lots of people who had projects in pipeline. Okay. Literally, they were constructing showrooms, they were constructing hospitals. Those people also had to rethink, apart from the interest expenses, let me not incur any expenses so far. Obviously, see, for some cash flow was an issue, for some it was not, but it still made them rethink why I should incur these expenses now. So when you do that, why? You allocate resources accordingly. This is the only resource available, then you allocate between two different departments and take it forward. So zero-based budgeting is a process of creating a budget from nothing without using prior year's numbers or spending any number on that. Okay. Now, a classic example I told was taking the meetings on Zoom. One such organization which had previously had traditional outlets to sell its books, now moved to e-commerce space. So when it moved to e-commerce space, did it actually do anything new? It is still selling books only. But what has happened? The way of operation has shifted. It needs to relook at its expenses, rent, advertisement, staff cost, everything it needs to relook. The skill set that is required for online is different from the skill set that's required for offline and online. Yeah. So they had a rental expenses of 5,000 per month per outlet in 10 cities, which made it 50,000 per month. Now they hardly require 2 offices. So there was a cost saving of 40,000 per month. But to sell online is also not easy. So they had to spend on digital marketing, which increased their budget, advertisement budget earlier, which was 10,000, it made it 40,000 now. So somewhere they saved, somewhere they spent, not necessary. In this example, it's almost equal, but not necessary it can be equal. But you need to look into why you are spending and is there an alternate way to do this. Especially, I'm telling you, lots of my clients have reconsidered the way they are operating their business itself during COVID. In natural or regular course of time, you may not be doing it, but they had done this during COVID. Scenario 2, a car manufacturing company which had earlier outsourced certain parts in its final product costed 5 lakh rupees. Now what has happened? It made it rethink. Why should I expend it here? Can I go for in-house manufacturing? And how much will it cost? So they assessed it, it costed them 3,50,000. It was very, it was a revealing experience. One of my client who actually is setting up solar panels, he was in the process of outsourcing certain parts. And with this COVID, this April onwards, they have started manufacturing these parts, and we did their costing engagement, profitability engagement, and we found that they are making margins on the parts as well, apart from the entire end product. So it was a backward integration. But since you are questioning the status quo, why can't I do this? Is an expense required? Is it possible to do it in-house? They were able to do it. It's just justifying whether you want to do it or not. If you still believe that, yes, let me continue to outsource, you will still outsource it. But one question you need to ask, why should I? Yeah. So this is zero-based budgeting. It starts from the scratch. The difference between incremental budgeting and zero-based budgeting is it starts from the scratch. In incremental, previous year number acts as a base. Emphasis is given to activities. Emphasis is given to why This expense needs to be done. Here, past is done, so I will continue to do it in the future. Its cost effectiveness is analyzed. Not necessarily it is analyzed because it's been a process practice. Every year we do 5 pujas a year in the office. We will continue to do that. Relies on future estimate. What is the future towards? If the future is towards digitization, should I continue incurring these costs? If no, then I should move to newer costs and eliminate the older costs. It relies on historical. So many years people have been buying like this and they will continue to buy like this. In fact, zero-based budgeting is more time consuming and extensive, and incremental budgeting is less time consuming. So I'm just giving you a comparison so that you have clarity. Everything doesn't get muddled up here. Any doubts so far? Yeah? Clear? If it's clear, then you can message, I got it, IGT. Clear, got it, okay. Great. So next is a very important budgeting, which I have seen most of the time being successful. I can vouch for it that this type of budgeting never fails an entrepreneur because it makes him be on track day in, day out. This budgeting is profitability budgeting. In this, what happens is a profit target is first fixed. I want to make a profit of 1 crore. I want to make, the organization needs to make 5 crores profit from this division. So a profit target is set. Once the profit target is set, then everything is reverse work. Cross margins, sales, then you know how much you have to sell. Like I said, we understood the break-even point, sales, during COVID. We understood these are the minimum costs that we have to incur, setup cost, rental cost, be whatever it is. And what is the break-even? And a very simple example I'm giving here. Somebody has budgeted a profit of 31,000 for the month. He knows these are going to be his cost: tax, finance cost, depreciation, inadmissible, selling, employee, administrative, indirect income. They are going to have 25,000, and gross profit is going to be 2,60,000. This is reverse work now. From here, then what is going to be the sales? I'm going to show this in detail now with the next example, but it's a very simple example. To earn 31,000 profit, the organization has to do a sale of 5 lakh rupees. Now, last or current year, this has been the sales 10 lakh, and these have been the expenses 9 lakh 38,000. This is the profit before taxes 62,000. Now I want to prepare a budget for the next year. What I do is first I categorize the expenses as variable and fixed. This is VC means variable cost. Okay. The stock is a variable cost. Okay. Selling and distribution is a variable cost. The more I sell, the more selling and distribution cost I incur. Marketing, be it whatever. Okay. Freight outward. Administrative cost. 35% of my administrative cost, like traveling, postage, courier. If I have more billing, I will do all this. If I have less billing, I may not do all this. So those are variable costs. But some of my costs are fixed cost. For example, employee cost. I need minimum. I need these employees. Whether I do 10 lakh sales or 20 lakh sales, I will need these employees. Finance cost. I have borrowed from the bank, so I need to pay the interest. Then administrative, other administrative costs like rent, like electricity. Independent of sales, I still need to make the payment. So these are some of the fixed costs. I categorize them as variable cost and fixed cost. Based on the current year, I know that this is the contribution, which means sales minus variable cost is equal to contribution, and this is 39% of my sales. Okay. Now I know what is my fixed cost. Next year, what will happen is some fixed cost will increase by 10%. or 5%, whatever it is. So it has become rent will increase, employee cost will increase. So it's like 3,60,000. Now profit I have fixed. Last year I made only 62,000 profit, but this year I'm looking forward, this month I'm looking forward for 85,000 profit. Now this profit, let's say, along with this fixed cost becomes my base. Somehow I have to make so much of sales so that I can make profit and cover my fixed cost. Now, how much sale you should make? You should make a sale 4,53,000, 3,68,000 plus 85,000, which is 4,53,000 should be your contribution, which should be 39%. Then what is 100%? Yeah, 11,42,323. Any doubts here? Yeah, any doubts here? Because this is fundamentally, I understand that these are my costs, and if I incur these costs, I need to at least make so much profit. To make so much profit, what is going to be my sales? So you know your cost, you know your profit, and how much sales you need to achieve. IGT? Or there is some doubt? Okay, Jaya is asking for zero-based, what important points or aspect we should look at to begin. Fundamentally, if you are a startup organization, okay, just begin. Then you need to plan. This year, I'm going to have 2 people. For those 2 people, what should be my qualification? What should be the qualification, or what should be the skill set, and what will be the market cost for that? So I'm just giving you an example, okay? And similarly, let us say what kind of marketing spend I can do, what kind of resources I'm having. I'm having 1 crore. This 1 crore, how can I spend? And by spending this, how much income can I get? So this kind of planning needs to be taken into consideration for zero-based budgeting. Absolutely. So this is complete experimentation. Lots of times we will go back to our old methods. One of my clients, what they did was they wanted to check with third-party warehousing. Okay, they had their own warehousing setup, but they wanted to see if the third-party warehousing, they questioned, why should we do it in-house? You can, any entrepreneur can, right? So they questioned and they went for third-party warehousing. Fortunately or unfortunately, something like, COVID had come. So the cost was very high compared to their own. In fact, the cost was 50% or somewhere around 45% higher than the in-house warehouse cost that they were incurring. So then they took the decision next year, then they moved back to their in-house warehousing. But then it's not wrong to question. You have questioned, you have experimented for a period of time, and you have taken the corrective action again. Suppose you continue with this incremental cost, then it may not be a great thing for you. You need to see whether your decisions have fructified, given you that material results or not. Yeah. So this is profitability budgeting. There's one more budgeting. Okay, last. Nothing, no more budgeting. Last part, it is cash flow budgeting. I know it's interesting. You need some guidance on what to apply in which organization. That also is coming up. I will share that with you as well. And it is all a very structured methodology, which means every line item in your profit and loss account and balance sheet, both the line items need to be aligned towards the activities of the organization or aligned towards the cost structures of the organization. Now, what is cash flow budgeting? Cash is a very important component of business. Cash determines the liquidity. What is the position? So there is a difference between cash flow and profit and loss account. Cash flow means the day cash comes inside the business and the day cash goes outside the business. That period is the cash flow period. It's as simple as that. So if you're forecasting your collections to come next month, then and your payments, these are the payments that you have to make next month. This is called cash flow budget. Very simple example. This company expects to realize a cash collection of 40,000 and realize from its debtors 15,000. How does it plan to utilize? Now it has made a plan, which means it has a budget to utilize the following operating expenses, and he will pay the EMI. I'm just giving a small example so that you realize what is the inflow and what is an outflow. And based on the inflow, outflow, they will plan their cash flows. So opening cash, they have something. They got something from the sales, cash sales. They got something from the debtors. And operating expenses, they have to make rent, electricity, salary, and they made the EMI. So totally they are having closing cash balance of 17,000. Now they could buy an asset, they could invest in stock, whatever. But this is their cash flow budget. They may perform, this is their plan. They may realize this cash or they may not realize this cash. Then how do they manage their cash flow? This is the challenge for entrepreneurs. But if you have a plan, no, then you will make an effort towards making that happen. Yeah. So an example of this is, let's say a manufacturer, it's a lengthy example. What I would put that is, see what has happened. They have planned to bring a collection of 2,10,000. Are you able to follow me? 2,10,000 here in the right. Hi. Yeah, okay, good. So they have an opening cash balance of 20,000. 2,10,000 is going to come from cash sales. 75,000 is coming from the debtors. Okay. And they're going to pay salary, wages, other overheads of 1,50,000. So net cash flow from operations, from their day-to-day operation is 1,35,000. Now they know they are having a positive cash flow. They are budgeting. So they are planning to purchase another machinery of 65,000. They also have borrowed money from outside. So they will pay the interest of 50,000. Now what will happen? They got 1,35,000 and they have spent 165 and 150, 1,15,000. So they have net cash flow of 20,000. Now the closing cash balance is opening 20,000 to closing 40,000. So with cash flow budgeting, you will know where your money should go in real time. That is the outflow, complete outflow. Profit and loss gives you, oh, let's say even if I've built the sales today, but my collection is going to come only after 1 month, right? But what collection is going to come this month so that I can service my operational expenses? That we need to know. That's why we prepare a cash flow budget. So suppose, let us say season time, what happens? You will purchase raw materials and you will make sales. But the payment for the raw material has to be done in 30 days. Your collection is going to come only in 60 days. For the remaining 30 days, let us say the day you make, you don't have money. What you do a short-term borrowing. So as soon as your collection comes, you should return this money back to them. Lot of organizations do. Absolutely good, no issues about it, as long as you have the discipline of returning that money back for the purpose for which it was borrowed. Suppose you utilize that money to buy some capital asset later, whenever the collection comes, then you get into a debt trap. Okay. So arrange supplier payment, plan for capex, make sure there is equity. Suppose it's a long-term plan. You want to purchase an asset. It's not 65,000 here. It is 6,50,000 now. That month's collection won't be sufficient to purchase that asset itself. Then what you should do, is it possible for me to take from my reserve? If at all I have an opening cash balance of 6 lakhs, is it possible? No, I'm not having. Then you will see whether there is somebody to lend you that money, borrow from the bank for a long period of time so that you can repay comfortably. So you will have a positive cash flow in the financing activity as well. So you need to plan. I know I need a machinery, but without funds, if I buy, then I will choke my existing business as well. Yeah. So cash flow budgeting is a very important tool for high growth organization so that they are never in short of cash. Now let's have a quick poll. Which one of the following budgeting is based only on the past data? It's such an easy question. I swear my team has done a very beautiful question. Very easy. I think I should expect all participants to answer here. Perfect. Everybody says incremental budgeting, and almost yes, that's the right answer. Most of the time it's based on past data, and that is incremental budgeting. Yeah. The next is, what is budgetary cycle? Now, okay, we have seen why budgeting, why operation challenges are faced by an organization, how these operational challenges can be mitigated through budgeting, what are the benefits of budgeting, what are the types of budgeting, and now we should know the process of budgeting, because it's not simple as the word budget. Don't have budget, I will not buy this. So we are so used to that simplicity of the word that we use it so often. But when it comes to an organization, it has to be in a process. Yeah. So the first one is determine the budget objectives. Second is access historical data. Third one is agree. Okay, once you know what is the objective of the organization, it can be to acquire new market share, or it can be to sustain the profitability, or it can be to improve sales in the current market itself, anything. Okay, then you should go through the past data, what it says, how we have been performing, what are the challenges that we faced during that time. Then prepare the budgets. Okay, what looking forward in the future, what is our plan of action? We need to prepare the budgets. After we prepare the budgets, then we need to agree and draft, review the budget. Okay, because you can say I have prepared the budget, but then every person in the organization or every head in the department, heads of department, need to take care of these budgets. Execution of this approved budget. Now you have budgeted, everything is done month-wise, you have information. I will spend so much only, I have to earn so much, I have to have so much of inflow, I have to have so much of outflow. Is it happening? Or are there variances? Suppose in your organization you have systems, process in place, then you can fit the entire budget in your accounting software itself. Some software that you are using, so that you can easily do the variance analysis. So analyze the variances. If the variances are too high, there are only two reasons for it. One, you have not budgeted properly, or second, you have not taken the efforts to achieve your budgeted targets. So both ways you need to relook at it and then reset the target if at all it needs to be. Yeah. The last part of the entire thing is, whatever corrective action you are thinking that because of this reason I didn't perform, or the organization was not able to perform, then you need to take those corrective action. It's a very process oriented, very, it requires a lot of discipline, because right from preparation of the budget to following up month on month, and then consolidating it for the whole year, reviewing, taking real-time action, it requires a lot of nothing. Only simple thing is discipline. Lot of simple thing called discipline. Yeah? Are you all with me? So I said that, yeah. So to sustain your position, go for expansion, improve efficiency. These are the major reasons why an organization go for budgets. Now, I have an example, but I'll quickly run through this. One, we had prepared a budget. Basically, the actuals was not as per the budget. So we prepared a revised budget. Generally, what happens is, we plan for a sale of 2 crores, but let's say we achieve a sale of 1.5 crores. Then we need to revise the budget to accommodate for all the variable expenses. Fixed expenses, nothing can be done. Rent, electricity, we have to incur. But some variable expenses need to be toned down, no? Because you have not done so much sale, you should not expect those. So all the red ones here highlighted are the variable expenses. Okay, in this variable expenses, then according to the sales revision, from 146 it was revised to 142, but our actual was 138, and the freight outward was supposed to be only this much. We had incurred 4.5. So a lot of places, if you look into, we have saved here, but some place we have also incurred higher, which means from 1.3 lakhs or 1.3 crores of diesel expenses expected, it became 1.55, 0.25. Maybe short supply of power, more than expected. So that could also be reason. So like this, every expense has to be analyzed. Okay, why it has to be analyzed? Let's say to your child, they give you a syllabus, okay, and then say, this is the syllabus and you are passed. Will somebody accept it? No. So similarly, there is a budget and against which what was our performance, and have we performed according to that? Then the child moves to the second next grade. Similarly, then the business moves to the next level. See, till one point of time, that was an institutionalized discipline to us. But once we became entrepreneurs, we are on our own. Nobody to guide us or nobody to whack us either. So when such things happen, budget is one such tool that keeps everybody disciplined. An entrepreneur should also consider that budget is an important thing and he or she will abide by it. I will hold myself accountable to the budget I have prepared. It's as simple as that. Budget is important for me. When I show the importance to the budget, so many people I have prepared budgets, but when the entrepreneur himself gives focus, gives respect to the budget, the organization automatically aligns towards it. It's a very important thing, and I've seen that happening. And when the entrepreneur, in fact, we have worked with organization where net profit was given as a target to employees. Each store, this much profit has to be achieved. Now they internally discussed, they said, if I have to increase sales, it is difficult. I might as well increase the margin. To increase the margin, what I need to do? Should I sell this more? Should I sell that more? What kind of sales mix needs to be applied? So a lot of things. Okay. Similarly, expenses. What was my initial budgeted expenses? Because I'm not able to perform that kind of sales, what was the revised expenses? And based on this revised expenses, what is my actual expenses? And variance against that. So I have incurred more in, let us say, commission 6,000 or say, sorry, 6 lakhs more. Here I have incurred traveling expenses 70 lakhs more. So every area there will be one focus. Okay. One second. Every area there will be a focus. Okay. Why I have not incurred it? If I have incurred, what is the reason why it has increased? Lots and lots of clarity. Each line item, when it's threadbare, analyzed and reviewed. See, setting a budget is also not difficult, okay? But when you review and you have to answer to the budget, okay, it's the most humbling experience, because that's a decision that we have taken. And we have not seen result of that decision. That may not be acceptable to us as an entrepreneur. But no fact can be hidden. No number can be hidden. I might account it this year. I might account it next year. That's absolutely fine. But then this is the consequence of the decision that I have taken. Every number that is shown in profit and loss account and balance sheet is a result of some decision an entrepreneur has taken, or a team of people have taken over a period of time. So we can't just run away because profit and loss statement shows sales have decreased. We can't run away from that place, right? We need to face it and then grow. So a budget helps us. It's a reflective mirror that says this is what you wanted to be and this is where you are. And so let's take those corrective actions. Fundamentally, all of us, when we get a report card, when we were children, I missed that centum by 1 mark, and that was one silly mistake I did. Or let's say, even if we have scored 30s or 40s, okay, so much I'm not even able to score here. Let me improve. Next time I will do well. At least the beginning will be good, no? Better. So every time there is a report card, the impetus to improve is always there. Similarly, every time when we have this budget variance analysis, the impetus to improve from the next month onwards will always be there. So that gives that motivation, the achievement factor for every organization. So determine the budget objectives, access your historical data, what you have done in the past, agree, draft a budget, agree and review the budget, execute it, which means now start taking those decisions, monitor, the variance, implement the corrective action. This is the budgetary cycle as well. This is the entire budgetary process. Any organization and any kind of budgeting. Let it be zero-based budgeting, let it be activity. Finally, you came to a number, right? Against the number, what is your performance? Yeah? Everybody with me? IGT? Can I see some IGT there? Yeah? Perfect. Got it. Got it. Super. So now, which budget is suitable for which organization? Jaya, are you there?
Yes, yes.
Okay, great. Yeah. So what kind of budget is suitable for your organization for any, for which kind of one? A budget, for example, let us say, see here also it's an example, but still I have prepared budgets for organization having incremental budgeting for one division, which had been operating for years together. And let us say zero-based budgeting or an activity-based budgeting for another division. For institution, educational institution, the entire focus was on cash flow budgeting. So it's all dependent on what type of organization it is and which budget would be suitable to them. So incremental budgeting, hotel, tourism, where let us say there are 100 rooms and you know this is the capacity. They can charge the customer more by adding some service or by increasing the price. Activity-based, manufacturing, power sector, auto sector, they are more activity-based components, line, assembly, adding them. Cash flow budgeting, infrastructure, all infrastructure project where initially the cash outflow is more and later only there will be cash inflow. Okay. So you need to do a cash flow budgeting for them. During downturn, economic downturn, or you know, in fact, in during or post COVID, some of them are saying that cash flows have become much better because they are supplying only when they get advance. It's as simple as that. Okay, earlier it was not like that, but now they are saying anyways, a lot of money got stuck up during COVID. Now whatever we supply, we will supply only by taking an advance. Zero-based budgeting for government projects, they do zero-based budgeting. Online retailers, e-commerce model, because they need to know from where their next order is going to come from. And again, once this gets established over a period of time, it can move to incremental budgeting. Startups, business in stress. When the business is in stress, every rupee matters and you should know why you are spending for that. If it is essential, then we need to spend. Otherwise, let's wait and see what the results are and then move to the next expenditure. Profitability, professional services, textile industry, general trading, you can use. So this is also just a sample, okay? There could be some businesses where we would be using a combination of one or two. Yeah. So let's have a quick poll. Which of the following budget is suitable for retail textile business? Very simple question. Perfect. So both cash flow and profitability budgets can be done depending on the stage and size of the organization. 70% of them have said it is a profitability budgeting. Perfect. So good to go. Now, just some practical examples. I've already shared with you one example where this was the annual budget. They determined an annual net sale of 50 crores and a profit of 3.8 crores. Okay. Now, till April 21 to June 21, they were able to perform only 8.6 crores and a profit of 60 lakhs. Now they had a trajectory to go. What their teams was saying was, we may be able to achieve only 45 crores for the year, seeing the trend in which the first quarter has gone, which means there is a deficit here. Deficit of around 5.35 crores. I think something wrong here. Okay. So what should we do here? There were various strategies that were implied. There were two fundamental things in which one was the cost. They reduced some costs there. Second was sales improvement strategies. It could be training the salesman, it could be incentivizing people, it could be shelling out a little more than what usually they had, but they made sure that they are reaching somewhere close to this 45 crores or the profitability of around 8 crores. Yeah. So once you know you're on track, the review and the corrective action makes a lot of difference. One more case study that we had done during COVID time was Jan 20. Okay, we had planned for annual budget of 2021. Okay, everything was planned, and this is what is the plan of action. These are the teams required. This is the area, geographical area of expansion. The client planned to expand in Karnataka and Andhra. So all those things were decided. Okay, in fact, they were appointing agents, distributors, and other things. March 20, COVID struck. And it was complete panic in the lockdown. We had a web meeting and we revised the budget end of April, almost end of April. The annual budget was revised and a break-even point. What will be the break-even point? Whether we should not make loss this year, we should be profitable. That was the objective. So May again it was locked down, and so we reviewed and started taking actions. The client started taking action. What action he took? Some cost structures he worked upon, some incentive. So from the fixed cost structures, they moved to variable cost structures. What variable cost incentive? In the sense, if there is performance, then they give an additional incentive. So it was not a very complete movement, but still a gradual movement towards variable cost structures. Perfectly done and at least thought for. Okay. July, there was an initiative by government for a phased unlocking. So some places were operational, so goods were supplied to those places. In fact, raw material supply was a challenge. So how do you make sure that you have enough raw material for further production? But since there was improvement in the situation, production schedules were drafted. Okay. And based on the geography and season, upcoming season, production initiated. In fact, there were, by September, we knew that what had happened till August and what we had planned for the break even, how much was the deviation and how we are going to cover it up. Almost every month we used to meet the client and we used to have this discussion. By November, there was a pent up demand. So it clicked so well that the production was fully sold out. In fact, they had orders that were not fulfilled. The client was able to make some profit by December. November is basically a Diwali month, okay, because of festival season. And it was very, in fact, much better festival season than the other years. And December, they revised the budget again for the next quarter so that there should be at least a 10% profitability. And they reached near to that, but then due to sustained control of expenditure and strategies for improvement of sales, they were able to make sure that they gained back the profitability that they thought they will not make during the year. In fact, current year they have achieved a sale of last year by December itself, which means the next 3 months it is going to be an incremental sale. They reach pre-COVID levels or surpass pre-COVID levels as well. But that requires very consistent approach, and the entrepreneur has to have the discipline. The teams have to have the discipline of monitoring where they initially set out, where they are, and how they can move forward. Very simple, not difficult, but requires discipline. Budget is a very simple exercise. And I have seen entrepreneurs 150 crores move to 300, 350 crores in matter of 2 years, not a year, single year, in matter of 2 years with consistent discipline of following the budgeting. Two things important. There has to be a process in the organization. Second, there has to be financial discipline in the organization. Automatically, growth will be taken care. Obviously, once you have money, what will you do? You look forward for growth, right? So budget provides that financial discipline so that we can, as an organization, everybody is aligned towards that objective. The process of budgeting is as simple. You know the objective, you access your data, you understand what is the industry doing, you see your competitors, you see the startups in the industry, you draft your budget, review your budget, make sure everybody in the understand the budget that you have drafted, and then you move forward. Execution of approved budget, outcome, variance analysis, and corrective action. It's a very simple process. In fact, what is there in this process, you can ask? It's a simple, we all know this. It requires discipline to be followed, whether it is on a monthly basis or quarterly basis. It requires some discipline to be followed. It's possible. It is possible, and budget is that guidance, that lighthouse that helps an entrepreneur to take all his decisions effectively. Yeah. Any queries? I'm done with my session. So any query anybody has, we can have a discussion now. Thank you all. I think you can unmute and speak since we are just a couple of us.
Hi, thank you for a beautiful information. I just wanted to understand, like, specifically when you go for cash flow budgeting.
Yeah.
So in cash flow budgeting, for example, if it's not a very well-established period of business the company has got, and everything is changing so dynamically. So
Yeah.
is that equivalent to zero-based budgeting? I mean, how do you begin? Like what I mean to say is that.
Okay. Zero-based budgeting is questioning why you are doing this. It's simple. Once you justify, then you incur those costs. Or once you justify why you are catering to Tamil Nadu market, I'm getting good collections. Or why I'm catering to international markets like Singapore. These are the reasons. You justify it and it's over. Okay.
Okay.
But when it comes to cash flow budgeting, whatever you have justified, no, when will it materialize?
Okay.
I'm saying, yes, I'm going to do a sale of 20 crores in Tamil Nadu market. Now tell me, when are you going to do, when I'm going to get the collection? That is what is the cash flow. The basic difference between profitability and cash flow budgeting is the timing. I have done a sale of 1 crore, but my collection of this 1 crore will come only in next month. Okay. So when I'm going to get the collection, that time only I'm going to put a budget for cash flows.
Okay.
Yeah. This month I'm going to get the collection from last month's sale. Yeah.
Okay. Okay.
So when, let us say, when you are in a very dynamic organization, fast growing organization, what you will know, you will know the expenses that you are going to incur.
Mhm.
Okay. I'm going to set up my digital marketing team, which will cost me 30,000 per month, 35,000 per month. You will know something like that. You will also
Right.
know that, your entire technology cost or the app cost, development cost, the software developer, that cost is going to be so much. So
Mhm.
because you will know your cost, now you see how much collection you have to make it.
Okay.
Yeah, you need to reverse work on that. If you are able to reverse work on that, then maybe you will be able to match your collection with your outflow. But in a growing organization, initially what happens is we have to pump in a little money for the first 5 months, 6 months, or 7 months, till we see the light of profitability in the 7th, 8th month, or positive cash flows in the 7th, 8th month.
Mhm.
Okay, so first thing you do is zero-based budgeting. You construct all the cost. The second thing you do is understand the timing of these costs.
Okay.
That is the cash flow budgeting. Then you will be able to manage both. That's why I said sometimes I'll use both. Okay, cash flow budget is independent of all the 4 types of budgeting. Even if I do incremental budgeting, I can still carry on along with it cash flow budgeting.
Okay. Also have one more question. Like, when you're budgeting, of course, there are expenses and income. And
Yeah.
very important aspect, which I feel is also your fixed assets, or maybe for a company, it is a fixed asset.
Yeah.
So how do you keep a balance between your income expense and a fixed asset budget?
Okay. What happens is, if I'm buying a fixed asset, the life of the fixed asset is for 4 years, 5 years, 7 years, 10 years. It is for a longer term. Correct? Okay.
Yeah.
That's why there's this concept called depreciation. Okay. If the life of the asset is for 10 years and I use it, this is the first year of use, 1/10 of that cost, I will book it in my expenses itself. Okay. Now the remaining things like salary, rent, electricity, these are recurring in nature. Once paid, expended, it is over. It won't get carried forward even for 1 month.
Right.
Okay. And now to maintain a balance between fixed expenditure and revenue expenditure are recurring in nature. Fixed assets are once in a while. Initially, when you want to set up, that time you incur fixed assets expenditure. Or let us say you want to add capacity.
Right.
That's when you set up, that's when you incur fixed asset expenditure. So things like this, when the outflow of these fixed expenses is much larger than your regular recurring revenue expenditure. So usually, if we are not having so much capital, then we'll go for some loan.
Right.
That's how you match your cash inflow and cash outflow. Okay. Alternatively, what earlier entrepreneurs, I can say that, used to do is they will build a reserve.
Okay.
Next 3 years or next year, I have to buy a machinery that is going to cost me 1 crore of rupee. Okay, I am going to build a reserve from the profits every month, put that amount in an FD because it's a short period of time. Put that amount in an FD and then make sure that I have the cash flows to purchase it.
Okay.
Okay, so that requires some discipline here again, because consistently you have to keep putting the money and accumulating it for a fixed asset. The remaining are the expenses that are day-to-day expenses that you need to meet with your day-to-day sales.
Okay.
Yeah.
Thank you.
I hope I have clarified. Yeah.
Yes. Thank you.
Sure. Yeah. So for all of you who, Kirti, can you just share the feedback form? I have a template in the chat. I have a template. So if somebody wants a template, fill the feedback form. You will receive a template. You can start your budgeting exercise in that template. Okay, it's a very simple form. Ask for your name, number, and other things, and you will be provided with a budgeting. All you have to do is take that print of that paper, one sheeter, and fill the budgets for next 1 month. That's it. That is your trigger point. Today is Jan 28th. So for February, month of February, what is going to be my budgeted sale, budgeted expense, and how I'm going to track it. The month after that, see what will happen is when you start putting the numbers in that paper, you will search for your accounts team, accounts people, what are the numbers there, what are the numbers here. But that will be itself a revelation. How many things have to be put in place and then taken forward. Yeah. So already all set.